Good afternoon, everyone. Thanks for joining us. Your presenters today are Brian Greer and Robert Dumas from Tax Connects, and they'll be discussing the pitfalls of sales tax compliance. Just a few housekeeping items before we get started. All your lines are on mute and will remain on mute throughout the webinar. As a reminder, this webinar is not eligible for CPE credit. A recording of the webinar will be emailed out later this week, but you can find the slides in the handouts portion of the GoToWebinar panel. If you have any questions, please submit those within the questions box, and we'll answer those as we go along. We'll do our best to get to all of them, but if there's anything that should be answered in private or we can't get to them all, we'll respond to those afterwards via email. Thanks again for joining us, and with that, I'll go ahead and pass it over to Brian.
Hey, thank you, Kate. Appreciate the introduction as always. And if the audience is not familiar with Tax Connects, I'll provide you just kind of a quick overview of our business, and then we'll kind of get to the presentation. But Robert and I, we've worked together for what, 25 years?
25 years.
So quite a while. Good portion of our lives have been spent working together. We've always been, at least from my perspective, I've always been, and during that time with Robert, I've always been in the sales tax industry. And specific to Tax Connects, we really kind of focus in, I'd say, three different aspects of sales tax management and sales tax compliance. And the first piece of that would be what I would consider kind of a consulting or advisory type of practice or service. So we help companies really figure out, what are their sales tax requirements? Do they have nexus? Do they have a filing obligation? We get involved in a good bit of, remediation activities and even sales tax audits. The second piece that we focus on is the sales tax calculation. So once you've identified that you do have a obligation to collect sales tax, you've got to start thinking about, how do I do that? How do I get sales tax on the invoice? How do I charge that sales tax in the shopping cart? So we have software that facilitates that process. And then thirdly, and really what we're going to talk about mainly today, is the compliance piece of the puzzle. And that being, now that you've collected the sales tax, what do you do with it? How do you get that, report it, and remit it to the appropriate jurisdictions? So I'll kind of flip over here to the agenda. And what this is based on is a lot of transitions of clients from other outsourced providers or even in-house compliance solutions where they're preparing and filing returns internally, and then moving those solutions and outsourcing that compliance process to us. So it's just kind of a series of different pitfalls and issues that we've seen over the years. And specific to transitioning from one provider over to us, we have currently close to 500 clients, and I'd guess half of those, Robert, have been outsourced to someone else. Is that?
I would say that's
an estimate.
No, I think that's an accurate estimate. Yes.
So about half of them were outsourced to other organizations, the other half doing it internally. But again, we're going to kind of highlight, some of those pitfalls and some of those issues that we've seen over the years. So with that as the backdrop, I'll let you get started here, Robert.
Thanks, Brian, and thank you everyone for attending today. I'm only going to spend about 20 to 25 minutes with you. I think we can get through it in that amount of time if that helps you plan the rest of your afternoon. As Brian said, we're going to go through the pitfalls of sales tax compliance, and this is really based on our work with the 500 or so clients Brian has mentioned to you. Really the lifeblood of sales tax compliance is your billing system, because the billing system is the mechanism that you use to make sure taxes are assessed to your customers. So then that leads to all the questions associated with what are the issues in the billing system. Well, the first and foremost is what, if any, of your products and services are taxable, and how do those taxable products and services get integrated with the billing system so that the billing system's tax decisions are appropriate for the kind of business you're in and the kind of services you provide. So making sure that if you have a taxable product and service, it's defined appropriately and matched to the appropriate product code that's going to exist in your billing provider's tax tables. Definitions matter. And what we see a lot of times is a product is going to be described one way, but when you talk to the customer or you talk to the engineer that might be involved in product development and management, the product or service being provided is a lot different than what is defined. So you have to be aware of that, because those nuances of definition versus actuality, what's happening in reality, can make a big difference in how your product or service is taxed. So figure out first and foremost if you have services subject to tax, and then it's where are those services and products subject to tax. That's the nexus issue. A lot of people are defining nexus these days based on the economic nexus standards established in the Wayfair case about 5 years ago. But one thing people miss consistently is the old nexus standard based on physical presence is still there. There was no change associated with that. And many people are relying too heavily on the economic nexus standards and ignoring the fact that they may have physical nexus, even though they haven't reached and may not reach for a while the volumes of economic activity that would potentially give them nexus. So you don't want your billing system to calculate a tax in a place you don't have nexus. You don't want to collect where you don't have responsibility. And you also don't want to have responsibility to collect tax and not flag the appropriate state in your billing system. And though economic nexus is a quantifiable standard, you really should study it, do a little analysis before just turning on and off states for compliance in the billing system. Because what we have found is once the billing system is implemented, it is rarely reviewed and rarely looked at again. So the decisions you're making tend to last for years, and you just want to be sure that that those decisions make sense for your business. And the other thing, speaking to that point, is because billing systems are the lifeblood, don't just assume they're going on and everything is great. You get new products and services that need to be mapped. Changes in your business may change your nexus footprint. Be sure you're periodically reviewing your billing system and the setups so you can be sure that you're collecting and the correct tax. Now, as you know, you're not the taxpayer, your customer is. That's why you're collecting it from them. But unfortunately, if you don't do that correctly, the states can come back to you and make this tax responsibility that falls on your customers a responsibility of you and your company. And so that's the risk you want to avoid by properly setting up the billing system. Brian, did I miss anything that you can think of that you've seen or heard in some of the clients you've been involved in?
Yeah, I'll kind of hit on this, maybe this third bullet point, but at the very bottom, where we see credits being, I guess, misapplied. And what I mean by that is I think it's fairly frequent that we see scenarios where companies will charge the tax to their client, of course, then immediately remit it in the following month. You've got a customer that's on a net 30 or a net 60 payment term that then short pays the invoice because they never provided the exemption certificate perhaps up front, and now you've got this credit sitting out there, where you've actually paid the jurisdictions, the sales tax. It was somewhat erroneously charged to begin with. So now you're in this credit situation, and what do you do about that? And we've seen a lot of situations where that just continues to sit out there and accrue and accumulate over time, and eventually those credits go out of statute. And we've definitely seen those scenarios where there's hundreds of thousands of dollars of these credits sitting out there that you just have to really pay attention to?
Yeah, I'm really glad you mentioned that, Brian, because I had forgotten that. I've recently been working with a client that converted to a new billing system about 6 months ago, and I've had the worst time trying to reconcile the tax collected per the billing system to what they're accruing on the books. And one of the biggest differences were the tax credits Brian had mentioned, in that the tax credit process was established outside of the billing system. And so the clients were getting the credits back, but that information was not running through the billing system and not running to us as the return preparer. So as Brian said, a lot of those credits would have been permanently lost had it not been identified. The other thing we found with this particular client is they had a small segment of their business that couldn't go through the billing system, so they were doing manual invoices. And we were not getting the sales tax information from the manual invoice process. So be sure that the billing system covers 100% of your workflow, your processes, and what you're invoicing. And if it doesn't, be sure you have some supplementary process in place so those taxes get billed and those taxes get paid and reported. Thank you, Brian, for mentioning that. Tax calendar management basically is you've collected tax, now you have a responsibility to report and remit. And to do that, you've got to register as a taxpayer in states and various counties and potential cities and counties throughout the country. And in the process of doing those registrations, you're establishing a tax calendar. So you're identifying yourself to a jurisdiction and committing to reporting and paying taxes monthly, quarterly, semi-annually, or annually going forward. And so that has to become a calendar so you don't miss those related due dates. And if you're a growing business, you're turning on new states every month in your billing system and collecting new taxes every month, you need to monitor your calendar based on the taxes you're collecting but have not yet registered to remit. And so that's a big part of the calendar. Be sure that, number one, you're only registering where you have a responsibility. In other words, you're collecting tax. And be sure that you do register once you reach a point where you're collecting tax and it's material. Material meaning it's more than $5. One thing that we do at Tax Connects is help clients analyze the cost, benefit, and risk associated with compliance. We always tell you, collect the tax. Don't absorb a responsibility you shouldn't. But if you're collecting $2 a month for a year, I don't think it makes sense to register as a taxpayer to file $24 of tax going forward or $2 a month going forward. There's a little bit of risk in it, but the risk is far less than the cost associated with maintaining that potential filing in your tax calendar. And the tax calendar is a living, breathing thing. So you have to stay on top of it. Filing frequencies change based on your volume of taxes. If you have large amounts of taxes, you could even be making prepayments. And if you miss due dates, you're going to find yourself inundated with mail from the jurisdictions. So the tax calendar management, something you have to do every month. You have to integrate it with your billing system so that you know that the taxes you're collecting are associated with a specific return, and those specific returns are either on a tax calendar to be filed today or on a tax calendar to be filed at some point in the future. And so that's what makes the tax calendar management important. You do not want to accumulate these taxes that you've collected and not report them. Those are considered trust fund taxes. The jurisdictions expect you to report them. It's their money. So you have to manage it very carefully. Brian, anything I missed that you can think of on that one?
Yeah, I kind of like the idea that you described the tax calendar as a living document, because it is something that always changes and needs to be updated. A couple of things that we've seen with various transitions that I will point out related to registrations. It sounds fairly easy and straightforward to register for sales tax purposes, but depending on your business, there could be different types of tax types that you have to register for. You may not technically be collecting sales tax. It might be a seller's use tax that you should be collecting and registered for. Oftentimes it doesn't really make that much of a difference, but in some states it does. So understanding the type of tax that you should be collecting and registered for. I know we've seen scenarios where companies are registered for one tax type, but they're collecting a different tax type and it's being filed on the wrong return, essentially. The dollars are going to the right places, but there is an element of risk there. I think if an auditor comes in and sees that you're not filing the right return. Not a big deal, but just something to be aware of.
No, I'm glad you mentioned it, and it brought to mind a client that I've recently helped activate, and they had that very scenario. They're a telecom company, so there were a lot of taxes they were unfamiliar with, and because they were thinking sales tax only, they registered for sales tax and started reporting these non-sales tax types on sales tax returns. And so again, like Brian said, the tax got reported and paid, but it didn't go on the right return, and it wasn't reported correctly. And though you wouldn't think that would potentially create too much risk, it very much can, because if you were supposed to be filing, say, a communication services tax in Florida, but you've only been filing a sales tax, in order to come back and hold you responsible for years of communication sales tax returns, because you never started the statute by filing a return, even if it was a no tax due return. And so you've paid all these taxes on a sales tax return that were due on another tax return that isn't outside of statute. So there is real risk associated with that. The other thing that we've found, particularly in states like Illinois and Colorado, where you have separate local returns and state returns, filing Chicago tax on the Illinois state tax return when it belongs to Chicago can be a very costly mistake. The city of Chicago has as many audit resources as some small states, and they're going to find you. And Chicago has very high tax rates, 10%, 9% for some of their services. And if you pay that to the state incorrectly, they're going to hold you responsible for getting that money back from the state, but they're going to want to be paid what's due them. And so you have to be very careful with that as well. We also find that in Colorado with the home rule cities. So it is potentially a big issue, especially depending upon the type of industry you're in.
And if you're trying to go back and get that refund, in that example where you paid it to Illinois, first of all, they're probably not going to be super willing to give it back right away. But depending on how old that is, it could be out of statute. And now you've got an assessment on the Chicago side. You've already paid it to Illinois, and Illinois is not going to give it back to you. So there's real financial risk there in that scenario.
Yeah, I mean, it's one of the real pitfalls of sales tax compliance. You can be trying to do everything right, but a lack of sufficient knowledge could have you do something wrong for months and create years of problems for you. And these sorts of things that we're identifying tend to surface, especially if you're going through a potential acquisition, if your business is being acquired and your sales tax is being evaluated. Some of these issues that you didn't even know existed could surface and really serve to slow down the acquisition process or potentially derail it entirely. So it is something you want to be on top of, be aware of, and have knowledge about. The next slide is about the actual remittance and really the general ledger management. And we've touched on this a little bit. What you're collecting from your customer, you should record on your balance sheet as an accrued liability. And your objective needs to be to monitor that liability to make sure you're not holding on to taxes that belong to the states. And one of the things that really bothers me as a CPA is a large percentage of my clients never reconcile their sales tax payable account. So they don't know what tax liabilities are being held in their liability account that shouldn't be held. And so I think it's very important for you to look at what's coming out of your billing system, compare it to what you're accruing on your general ledger, and reconciling the difference and making sure you know what elements of your liability are potentially payable to which jurisdictions in which states. This goes back to what Brian mentioned earlier about the credits, and I mentioned about manual adjustments being done outside and manual invoices being done outside the billing system. Those are the types of issues you can find by reconciling your payable account, and that's what makes it really important. Another big thing that we find trips people up under audit is use tax. Again, consumers, you as a consumer, not a retailer, not a provider of products and services, have a responsibility to pay tax, use tax, on what you purchase for your use. If you're buying something, sales tax hasn't been assessed against you, you need to assess use tax. So if you're buying large amounts of equipment, large ticket items, check the invoices, make sure sales tax has appropriately been charged to you, and if it hasn't, figure out how you need to self-assess that use tax, what jurisdiction it should be assessed to, and make sure that gets in your general ledger, gets in your liability, and gets into your compliance process so those taxes are paid. One of the great conveniences of the states and most of the cities these days is they're providing an electronic way for you to file and pay your taxes. So you can pay your returns, pay your taxes through an ACH debit. Checks are usually an option, but not always. You need to be aware of that as well. Some jurisdictions will penalize you for sending a check. So it's a great tool to be able to pay electronically, but then again, you've got to manage your debits. And many of the people that are preparing the returns never see the debit clear the bank. So make sure the debit clears the bank so that you can have confidence your payment was posted timely, was received timely by the jurisdiction. Coordinate with your Treasury folks or whoever's looking at the bank statement every day to make sure your debits are clearing. And the other thing that we're seeing more and more every day, not just periodically, every day this happens, debits get blocked because people are trying to protect their accounts. They only let certain transactions come through them without advance approval. Make sure if you're doing debits to jurisdictions, your Treasury Department knows and can expect to see those transactions come through and can do what they need to do on their end to make sure they're not blocked. Brian, any more comments on that? Anything else?
Yeah, nothing else to add, but just to kind of reinforce that idea of the importance of that reconciliation of the the sales tax payable account. Just it's an extra check and balance for the business that everything that we collected got remitted correctly, or at least got remitted to somebody. It's a big red flag if you've got a balance that you can't account for in that sales tax payable account.
Yeah, and one of the issues that I see in many of my clients is we're getting data files from people that aren't necessarily involved in the accounting. We'll get a data file from an IT person who's been assigned the monthly task of downloading a report and sending it to us. And we'll send the accounting department a cash request and they'll give us the cash, but I don't have any confidence that the two departments are talking, so that the accounting department knows what's coming out of the billing system and can tie it back to the information I'm providing to them for the cash. So ownership of the process is one of the big undefined issues in sales tax. Who owns it? Because you have many people involved in it. As you've heard already, technology people, accounting people, treasury people. And with the billing system, please don't have the technology team own the billing system by itself. You need to have somebody in the accounting tax or tax function that can make the decisions about the taxability of the products and about how what states are turned on for tax calculation and when. I've seen too many of my clients come back to me and say, yeah, we did this product 3 years ago. I have no idea how it's being taxed in the billing system. And after they do some research, they find out someone in IT made a decision and mapped it to a generic category. And as a result, they've had a few years of erroneous tax calculation. It may or may not be material, but again, it's something somebody should own, so at least you can have an idea of the materiality and scope of your sales tax issues. Okay, now I just want to talk about the return process. This is what gets the tax you collect reported and paid to the jurisdiction. Unfortunately, you're dealing with 50 different states. There's 50 different systems and 50 different tax return formats and forms. Some have you combine and report one number for the state. Others make you go down at the district level or the city level or the county level, and it just makes pulling the data from the billing system a little more complicated because there's more details you have to be aware of in order to get the return prepared. So all returns aren't equal. Some will take you 10 minutes, some will take you 3 days. And so you just need to be aware of that. The due date for most returns is the 20th. There's a number that are due the 15th. But even with the returns that are due the 20th, depending upon how you pay, your payment may be due the 19th. So just be aware of that. Florida and Texas are bad about that. You can pay by debit, but you have to have the debit submitted by the 19th or the business day prior to the 20th. So don't think you can go on the 20th, file your return and make a payment and have the payment be considered timely. It won't be. There are some places that do require e-file, so you're going to have to go through the process of setting up a web file account. It's not always easy. We're finding the security around these accounts is becoming more and more stringent, which means you need more officer information potentially. You need administrator assistance to get access to some of these sites. So just be aware that it can take more time than you might think. And one of the biggest nuisances are the dual authentication. You get into a website and then have to rely on obtaining an authentication code from an email. And if you don't know where that email is going, and if the person receiving the email is even going to be available to forward it to you, you could get into a serious loop of trying to log in, generate authentication code emails, and never be able to get in because you don't know the email and you don't know if the person is even available to help you. So that's just something to be aware of. And jurisdictions really like to give you all your information on the web portal. So don't just go on your portal to file the return. Take a minute, look at the messages, look at the letters. That's where you're going to get a lot of information. If you are strictly relying on the mail, it's not going to help you. If you've received a notice and it's a large assessment, they've posted it on the website, you never received it through the USPS, you're still liable. So be sure you're reviewing the websites. One thing to be aware of, in Washington, you're filing a combined excise tax return, which includes sales tax and other excise taxes, gross receipts taxes, that aren't going to go through your billing system. And one of the biggest ones is a B&O tax or a gross receipts tax in the state of Washington. All your revenue, whether it's subject to sales tax or not, must have a B&O tax assessment. So just be aware there may be some returns where you're going to have to do a calculation that's based off of revenue, not billing system data.
Yeah, Robert, on a couple of those points, the dual authentication, definitely seen scenarios where whoever set up that registration initially, they no longer work at that company, their cell phone number, their email address. It's going nowhere. So we would like to see, and a lot of you may be doing this already, but we would like to see at the very least kind of a salestax@company.com email address used for a registration, so that if anyone ever leaves, it's still going to that centralized mailbox. You've always got access to it. That's one way to kind of get around that type of issue. Reviewing those web portals, it is a big deal. And even if you have an outsourced provider, sometimes we see, some of our competitors that maybe they have an auto file situation where literally it's just taking the data, putting it on a return, auto uploading it to the state. It's automated. There's no one looking over the process of managing it. Well, what happens when a notice gets posted to that e-file site? The automated system isn't looking for that. So you still have to go into those websites at least monthly to see if there's an issue there that needs to be resolved. So something just to kind of keep in mind as well.
Yes, and the web file portals, they take time to update, but it really does save time in the long run. I am working with some clients now that were former clients of mine 15 years ago, 20 years ago, and I can go and see my old business address is still the primary business address. And that's not a good thing, because I can tell you nobody's there anymore. And so it's a risk you take on yourself that you shouldn't. The jurisdiction isn't going to know you moved or you've got another provider. So be sure that the web portals are updated. It saves you a lot of time and energy later on. The next slide is just, what we really see, and people that are trying to manage sales tax in-house, the biggest issue is insufficient resources. There's a lot to think about. You've heard us talk about the billing, the treasury, the filing, and it's every month, and so you need dedicated resource to do it. Don't make it an additional task for somebody with a full desk of responsibilities. You're at risk for missing something. It's always much bigger than you know. And also, if you don't have the knowledge and capacity, participate in webinars like this and go to our website and get content so that you can educate yourself, so you'll be sure you're reporting and paying correctly.
And I'll add kind of a story here, and we're getting ready to wind down here. So if you do have any questions, feel free to submit those. But we're working with a client right now, and we started working with them, I'd say probably about 6 or 8 months ago, and they were in preparation to sell their business. We didn't know at the time that we were brought in that they were going to sell the business. That kind of unfolded over the course of a couple of months. But when we were introduced, we started to find out that this particular business had not filed tax returns for months and months and months across a lot of different states. They had one individual that was responsible for this. Come to find out that individual was actually embezzling from the organization. So they were terminated. There was police involved in the embezzlement type of operation. But then as we started to unfold all of this and find notices, finding non-filing issues, it just started to unpeel different layers of this onion. And it's a kind of a combination of it being really single-threaded through this one person, but then also not having any executive or management oversight in the process. And to your point, Robert, it really is all about not having enough resources. And I think on the surface, and I don't know how many times you've heard this in your career, it's just sales tax. How hard is it? You just got to put a number on a form,
yeah,
or a registration. How hard can it be? You just fill out the registration, and and there's, hopefully we've at least articulated that there are nuances beyond just putting a number on a form here.
And it should be easier than it is. But again, there's 50 states, So 50 different systems, 50 different groups of laws and rules, and it just is complicated. So it should be simple, but the reality isn't it isn't, and you need to manage accordingly. And Brian, after hearing that story, I don't know anybody can say sales tax isn't sexy. I mean,
police,
I know,
like a true crime episode.
Exactly. So the last thing I'm going to talk about is audit trail, and the hustle and bustle of trying to meet the monthly due dates and do your job, all your other responsibilities. You're going to forget very quickly what you did. And so 3 years from now, when an auditor comes knocking, you're not going to have any idea how you came up with the numbers for that return. So try to develop some level of support for the returns you're filing, save it in a centralized location so that it is available when you're either no longer with the business or an auditor comes knocking. You have a place where you can easily go and not have to try to figure out what you did 3 years ago. And it's also helpful to have this documentation if you're ever going to be acquired. It shows that you're a very buttoned-up organization if you can support your sales tax returns and audits. So that's been about 25 minutes. I want to stay true to that. So thank you for your time. Appreciate it.
I think Kate's got a poll pulled up here, and while you guys are answering this poll, I'll just kind of add my summary thoughts, and maybe you add to this as well, Robert. But I hear all of this, and I think the takeaways are sales tax can be complicated, especially if you're operating on a nationwide basis. You're operating in a single state, not that big of a deal, but certainly as your business continues to grow, this becomes an exponentially difficult process to manage. Secondly, the idea of it's something that you need to look at periodically. Periodically might be every 6 months, at least once a year, and not take the set it and forget it mentality, because you're going to have scenarios where you've crossed in a new state, you've introduced new products, something has changed in the business that you have to account for to help manage or that feed into this sales tax process. And lastly, making sure that there's some type of oversight. Even if you've outsourced to someone, there still needs to be some level of oversight. And at its most basic level, I think it's that GL reconciliation that you described. So I don't know if there's anything you'd add to that, or
only that so many of the clients that we've brought on over the last couple of years learned the hard way that there isn't a technology solution by itself that can do sales tax for you. It seems like there should be, but the reality is it's just too complex. You need really great technologies to execute it, but you do have to have oversight of it. You do have to have somebody making clear cost, benefit, risk decisions about it. Technology can't do that, and it's got to be monitored every month, because technology doesn't consider manual adjustments. Technology doesn't consider credits that aren't flowing through the GL. And technology doesn't reconcile the GL. So don't make the mistake so many of my clients have, that there is a technology-only solution out there, because it's just not possible.
Yeah, appreciate those comments. And thank you to the audience. Appreciate your joining us this afternoon. Have a great rest of the day.